Hello, my name is David Stevenson.
And my name is Paul Quattrocasas.
And together we are the founders of Future Food Finance. Starting today and every couple of weeks, we're going to try and catch up for 15 minutes each episode to do a quick run through what's been happening in the food tech scene. And then we're going to do a deep dive into one particular subject. I'm going to cover public markets, whilst Paul will cover private markets more. And we're both going to discuss the kind of bigger picture stories, yeah? Now, we have our own Future Food Finance Index. That's important to say straight away. So when I'm talking about public markets, we actually have our own index. Do go and look at it. It's on the homepage. I think it's right at the top. Just click on it. You go straight through to the index. And I think I'm going to kick off with the kind of public markets overview, actually. And then we're going to talk a little bit about a deep dive on the subject, which is about whether or not we're at the trough of despair, because it's pretty grisly out there. And the trough of despair really refers to the fact that certainly in the public markets, it's been a pretty miserable start to the year for most publicly listed food tech companies. What do we mean by food tech? We mean everything from kind of plant-based alternatives all the way through to ag tech and taking in kind of food delivery as well. So it's a pretty broad space, and pretty much all of it has had a terrible start to the year. In truth, it wasn't a good 2021 either, and it certainly was a pretty miserable last quarter. Certainly, if you look at the kind of one month to date figures, so we're speaking here on just towards the end, sort of the third week of January, pretty much every single stock in our index, the Future Food Finance Food Tech Index, went down in the last month. Some of the big losses were sort of smaller companies like Waiter Holdings and Codexis, who all registered pretty big losses in the last month. But it's also true that some of the other more well-known names, people like Deliveroo, people like DoorDash, people like HelloFresh, they also had a pretty bad month. Pretty much all of them are down over 10%. And even relatively straightforward companies like Ocado, which UK kind of, well, we don't know what you call them really, but I suppose home delivery, but also robotics and food technology company, even they were down as well. And in fact, it shows you how bad it was that actually Beyond Meat and Oatly, which have had a terrible last quarter, recently listed on the US markets last year. Oatly into dairy milk alternatives and Beyond Meat into, well, meat alternatives. They actually only notched up kind of small losses, even though they had terrible losses in the last quarter. So it's been a pretty miserable month. What's going on, I suppose, is that in truth, a lot of high growth stocks have done badly. So kind of stocks with what we call high beta have done pretty badly. But there's also something else going on. And I think that one of the issues that's going on is that the market basically has begun to develop some doubts about the food tech space. And I think in particular that there's real concern that, so obviously there are some secular issues going on. So the delivery companies have been hit by worries about whether or not their staff are employees or self-employed. But I think what's going on with people like Oatly and Beyond Meat as well, and some of the other companies, is there are concerns that the industry might be going a bit off the board, that the initial promise that was there hasn't really lived up to the hype, and that some of the share price valuations have gone a bit bonkers, which speaks to our broader subject really about whether or not we're in a kind of trough of despair. So I think there is a broader structural issue going on, which is investors are concerned that the big market that they thought was there isn't there, or maybe it's much smaller than they thought, and that some of these big companies like Beyond Meat, which have had a really tough time actually trying to increase sales into sort of catering establishments and wholesale, are facing a real headwind. What's your take, Paul?
Well, David, you say it's been a miserable month, and I think that's entirely true if you're a trader. You know, if you're looking at monthly returns and you're getting it out. If you're an investor and you're taking a fundamental view on these securities or on the sector as a whole, then it's a simple adjustment or correction or whatever you'd want to call it. And I think the examples I would give to the broader audience to demonstrate that are Zoom and Peloton, which, as most investors are aware, zoomed up during the pandemic to highs, to prices that most people considered unreasonable. And sure enough, the prices of Zoom and Peloton are back to where they were in April 2020.
Yeah.
So nothing has really changed. I'd also look at Beyond Meat in terms of the food sector, and it's quite an interesting one because there's a lot of commentary among investors, traders, that there are a lot of short sellers, and there's an expectation of it to continue to drop, and we can go into the reasons. But what most investors don't take into account is the longer term trajectory and what are the fundamentals, what are the causes that are driving that. And I think for perspective, I just, on Beyond Meat, because that's a stock, a company people like to talk about, I just want to give a little history in a minute here and go back to its funding and its pricing, because it's a company I followed for the last 4 or 5 years when it was doing the early round venture financing. In November 2017, so this is only 3-4 years ago, it raised $55 million at a $500 million valuation. A year later, it raised another 50 at a $1.3 billion valuation. And then it actually went public, this IPO, in May 2019. So less than a year later after that financing, at 1.2 billion. So $25 a share. And it, some people may remember, it shot up on that first day of the IPO to achieve the 4 billion valuation, which is where it is today. So if you are a long-term investor, if you're in for a year, 2, 3 years, and you look at just Beyond Meat, it's actually done very well. You would have made a very good return if you've been in, certainly from the IPO price. If you got in the day after the IPO at a 4 billion valuation, you would be flat today. In the meantime, Beyond Meat has gone on to grow leaps and bounds. And I just read this morning that McDonald's is launching the McPlant Beyond Meat burger in 600 McDonald's stores in Texas and in southern U.S. And most of the experts expect that within the next year, if not earlier, McDonald's will launch McPlant, Beyond Meat McPlant burger, across the entire U.S. franchise, and that's pretty significant. That is a huge achievement compared to where Beyond Meat was during its IPO, even back in May 2019. So I think that's important for perspective. Then, in that same context of looking back in time, you ask about the private markets.
Yeah.
I don't know if people realize how strong a year 2021 was. During COVID, during the pandemic, from a venture capital fundraising perspective. And this is technology, and food tech's a big part of that. So in 2021, $643 billion was invested globally in venture deals, which was a 90% increase, 90 over the previous year of about $335 billion. That's significant. And at the same time, Europe, which has not been known for great venture investing, grew 160% in 2021. And the other thing I like to point to is unicorns. Unicorn is a private company valued at over $1 billion. There are today over 1,000 unicorns globally, valued at $3.2 trillion. And the point is, if you go back 10 years, excuse me, if you go back 10 years, there are only about 20, 30, 40 unicorns. So the private markets are continuing to steam ahead. 2022 is a question mark, but so far it looks like it's more or less on track with 2021. So,
Paul, on that, what was 2021 like for food tech VC? Was that a strong year as well?
It was very strong, actually, and it depends on the sector you're looking at, but every single sector of food tech was strong. If we look at something like, and this is where it gets interesting, on-demand grocery and food delivery. You mentioned, David, some of the larger companies that are quoted and in our index, like HelloFresh and Deliveroo, and there's also Delivery Hero. These companies shot up like Zoom and Peloton during the pandemic. So of course they're going to naturally fall back to earth when things start to normalize. But in the background, we've had a huge amount of capital invested into private companies. And again, I just would like to state a few statistics there. And I want to give one example. A company called Gorillas, set up in Germany only in 2020. So only about 2 years ago. They raised in July 2020, $1.5 million. And then in November 2020, they raised $43 million. In March 21, so only about 4 or 5 months later, they raised $300 million. And then in September of last year, they raised $1 billion, which Delivery Hero led. And Gorillas is an example of the entire sector where I just read this morning that Zap, which is an on-demand grocer that's present in the UK, for example, is raising or has raised, rumored, from the Singaporean fund, $200 million. GoPuff raised 1.1 billion in December. Flink raised 560 million in December. Joker, US-based on-demand grocer, 193 million in December. Picnic, which is a Dutch-based grocer, 500 million in September, and the list goes on. Global.
And Paul, yeah. Are there? Do you think that there's any softness in the pricing terms on those deals, or do you think that the trough of despair in the public market has largely been ignored in those kind of deals?
Well, that's a great question. We could talk for a long time about that, and I don't have a one sentence answer. What I can say is that every company is different. Every company has its own DNA, just like every human being has a different DNA. So it's very difficult to generalize in that particular sector. There will be winners and losers. What I can say is I expect consolidation in that sector in 2020 globally, and we're already starting to see it. And there's nothing wrong with that. And I think from investors' point of view, both private investors, the VCs, and increasingly public investors, as these companies grow and consider either a SPAC or an IPO listing, consolidation isn't necessarily a bad thing. There's an expectation that these companies will consolidate and gain scale, like we've seen in ride hailing with Uber, for example. So there's nothing wrong with that. And one could say this is all part of the natural growth of a sector. But I think to answer your question about food tech, it's just an example of one part of the value chain, of the food value chain, that is exploding, that was already growing rapidly before the pandemic. The pandemic just woke people up to the reality of, well, we can have groceries delivered to us in 10 or 15 minutes or in an hour if we live rurally. And isn't that a great thing when we're not supposed to go out? And once people get used to something like that, they don't want to go back. And it's just going to get better. So we're going to have we already have drones. There's a drone, Mana Arrow, in Ireland that's doing drone deliveries today, and very successfully. People love it. You know, in 4 minutes on their phone, they can order a coffee.
I was in Northampton, and we were driving through Northampton, and we saw these little robots on the streets. The dinky little ones, delivering, so not by drone but by robot.
It's all happening, and there are financings announced every week in companies like that, like Starship, which is a robotics company. There's more new companies being formed to deliver on campuses and small towns and villages through robots. Drones are an inevitability. They're not imminent, so you won't see drones flying around everywhere this year, but certainly within 3, 4, 5 years, it's going to happen. We're going to see, incredible growth in all types of delivery. So that's the description of how things are unfolding on the delivery side with drones and autonomous vehicles, robots, and in fact, Ocado acquired 3 or 4 months ago an autonomous vehicle company to be able to deliver groceries and foods automatically. But if we go to the other extreme of the value chain where food is grown, so whether it's alternative protein, meat, fish, etc., or leafy greens and fruit and vegetables, there is phenomenal growth happening in the private markets, which most public investors just wouldn't know about. Last year, there was $1 billion invested into the lab meat sector, cultured meat. This is quite different from plant-based protein. You're growing meat in labs and fish. And there was also significant growth in vertical farming, indoor farming. To give an example on lab meat, I'll just mention one company, Future Meat Technologies in Israel, who I actually cold called them because I love what they were doing. This is about 3 or 4 years ago, just before they had done their first financing. So they've only got about 60 employees. Going back to 2018, in May 2018, they raised their first external bit of money, $2 million. And then over a year later, in October 2019, they raised $14 million. And then early in 2021, they raised $27 million. And then in December of last year, just about a month ago, they raised nearly $350 million, including from Marcher Daniel Midland's ADM Venture Fund and the Tyson Foods Venture Fund. So that's an example of what's going on beneath the surface where most public investors just don't look. And this is just the beginning. It's just the beginning.
Paul, I just want to just finish off though with a quick question though. You mentioned Beyond Meat coming into McDonald's plants. Beyond Meat. Sorry, I keep calling it Beyond Beef. Beyond Meat also launched an advertising campaign on British TV, which I thought was really interesting. And it's beginning to muscle its way into public consciousness, exactly what you're talking a bit about. But we're also just seeing the beginnings of a pushback. So I've been reading a lot more articles by vegans saying they hate the idea of Beyond Meat, yeah. And then I've been hearing from a different group of people who go, well, actually, it's all processed food. And how do you think that the industry, both private and public, yeah, because it's a common problem for both, so it'd be just the same for the Israeli company you're talking a bit about. How do you think that the industry will deal with this pushback that it's all a bit processed?
So this is what I love about this particular industry is that the demand is exploding. Certainly in the West, if we're looking at the UK, Europe, and the US, it surprises me, frankly, how many people want to eat plant-based protein, food, cheese, ice cream. I just read today that there's plant-based ice cream that's launching in a major supermarket in the US.
Yeah.
Absolutely exploding. And that means, of course, that it's going to attract all players. Everybody's going to need to have a plant-based offering if they don't already. And more people, as this food gets better, because it has to, if you're competing, it's got to taste good, and it ultimately has to be priced at the right range. It means more people will be eating plant-based or vegan food. And then that's the question of, well, which companies are going to win and which companies are not quite going to make it. And again, we have to come down to looking at each company individually. One thing that some people have claimed is we're going to have a Coke Pepsi battle with Beyond and Impossible Foods. Impossible Foods is still private. It has done funding in the secondary market, and there are valuations that have been thrown around. But I think ultimately Impossible Foods will be doing an IPO in the next year or so. And they could be the Coke Pepsi of the plant food industry, partly because they have enough capital and backing to be able to acquire other companies that might be an interesting mix. So to your point about, well, they're processed foods and there's all these other nasties, potentially even sugar that they're throwing in to make sure that their products taste good. That isn't easy to do in the plant-based world, because you've got all kinds of critics who are ready to jump and say, hold on, actually, it's not that healthy. And there are many other alternatives emerging for plant-based burgers and chicken and pork and so on. So I think what we're going to see is a constant improvement in everything, in the taste, in the quality, in the ingredients. There are many ingredients companies out there that are, for example, using mushrooms. Mycotechnology is doing some very interesting things with regard to improving the taste, but reducing some of the ingredients that otherwise aren't so good for you. So I'm overall a massive bull, because the food market, the protein market, is gigantic, and it's time for a change. Technology is finally allowing for these changes across the board, including ingredients where, frankly, it's needed the most. And I think that's also a very interesting area when it comes to indoor farming and vertical farming, going beyond organic vegetables and plants to pure, absolutely 100% pure leafy greens, vegetables, ultimately fruits. It's very exciting. And there's huge amounts of capital that will go into these markets. We're going to have ups and downs. Look, we may have a correction in the public markets this year, credit markets, or next year. And of course, it trickles down to the private markets. And when that happens, what we say to investors in general is to look to those sectors where there is so much demand across a broad spectrum over the longer term, that that if you're a longer term investor and you're not a month in, quarter out investor or trader, you're probably going to be okay as long as you're investing in the right companies.
And I'd add my favorite shortlist. I think people should look very carefully at the cultured fat and cultured oils, where that goes into plant-based alternatives. I think that's a really interesting space, and aquaculture. And maybe we'll come back to aquaculture another time, because I think that's a really big market. Okay, we've run out of time. So join us in a couple of weeks' time. In the meantime, go to futurefoodfinance.com. We've got loads of stories on there. We carry a weekly roundup of the best stories on the internet, look at our index and all sorts of stuff. But in the meantime, hope you enjoyed this first episode. We'll be back in a couple of weeks. Bye.